Hey guys, what's up? I'm Erin and welcome back to the channel. Did you know that nearly half of all Social Security recipients are paying taxes on the benefits they spent decades working for? After years of paying into the system, a retiree can face a tax bill on up to 85% of their Social Security benefits. So how did we get here? And could this soon change under Trump's new proposal to eliminate Social Security taxes? Let's unpack the controversy, the history, and the impact of taxing Social Security and what it could mean for your retirement. The taxation of Social Security benefits began in 1984. And has only seen one minor adjustment since then. Here's how it works. Single filers are taxed on up to 50% of their benefits with incomes between $25,000 and $34,000 a year, and up to 85% on incomes over $34,000 a year. For couples married filing jointly, they are taxed on up to 50% of their benefits with incomes between $32,000 a year and $44,000 a year, and up to 85% for incomes over $44,000 a year. While your entire benefit is not subject to tax, up to 85% of your benefits could be. And if you're looking at these income thresholds and thinking they seem like a low threshold to start taxing benefits, it's because they were initially set back in 1983, with one adjustment being made in 1993. So essentially they were set 40 years ago. So yes, those numbers do look low by today's standards. And it's important to note that these numbers are not indexed to inflation, so they haven't changed since that time. What would those numbers look like if they had been adjusted for inflation? If adjusted for inflation, single filers would be taxed on up to 50% of their benefits with incomes between $81,000 and $108,000, and up to 85% for incomes over $108,000 a year. For married couples filing jointly, taxes on up to 50% of benefits would apply to incomes between $103,000 and $142,000 a year, and up to 85% for incomes exceeding $142,000 a year. And I think it's no small thing that these income limits are not subject to inflationary adjustments. So let's talk about that. The House Budget Committee desires to more closely conform the income tax treatment of Social Security benefits and private pension benefits by increasing the maximum amount of Social Security benefits included in gross income for certain higher income beneficiaries, reducing the exclusion for Social Security benefits for these beneficiaries will enhance both the horizontal and vertical equity of the individual income tax system by treating all income in a more similar manner. And this is really the whole premise of the Social Security program. It is a program designed to more equitably distribute social funds. This is the whole premise of the system. That is why Social Security is a progressive system, because it provides a higher percentage of a worker's previous earnings to lower paid workers than to higher paid workers. Initially, this tax only targeted high-income beneficiaries, ensuring those with significant incomes contributed back into the system. However, over time, without having these numbers indexed to inflation, bracket creep has ensured that these taxes ended up being applied more broadly, as incomes tend to increase over time. Lawmakers may have underestimated how inflation would erode these thresholds over time. However, I believe it's more accurate to assume that rather than being an oversight, I believe that the decision not to index these numbers to inflation was a deliberate political compromise. When this tax was first introduced in 1983, roughly 10% of Social Security recipients owed federal taxes on their Social Security benefits. Today, that number is about 50%. Why hasn't Congress adjusted these thresholds for inflation, especially when most other Social Security metrics are tied to it? For instance, FICA tax limits, Social Security payouts themselves, as well as the bend points in the calculation are all indexed for inflation and adjust on an annual basis. So I think viewing this as an oversight is too simplistic of a view. Rather, I think it was designed to be more of a stealth tax to include more people over time. Now, trying to answer this question of should these benefits be taxed certainly brings up a lot of debate. One of the primary arguments that we see from politicians is that seniors shouldn't have to pay taxes on benefits they're receiving from taxes during their days in the workforce help pay for. You pay into the Social Security system by having your earnings taxed during your working years. So this argument suggests that once you get to the years where you're receiving Social Security benefits, that you shouldn't have to pay taxes on them again. Otherwise, the argument is that you're kind of being doubly taxed. Nearly 10% of seniors live in poverty, and even more struggle on fixed incomes. So the argument is that adding a tax to this benefit makes their financial situation even more difficult. And for many seniors, Social Security is their only source of income. And one of the primary goals of the Social Security program is to allow seniors to retire with dignity. Another argument that has been made by Steve Forbes is that for seniors who wish to continue working in their later years while also collecting Social Security benefits, he argues that it seems unfair to have them paying into the system through their earnings, but then also having to pay taxes on their benefits from Social Security. He sees it as an unfair tax burden for those who wish to continue with gainful employment in their later years of life. On the other side of the spectrum, the argument for taxing Social Security benefits is revenue generation. Social Security faces a projected shortfall by 2035. Without changes, payments would drop to about 75% of their scheduled benefits. Now, with that being said, I do believe that changes will be made with time. But an argument for continuing with this taxation is that this is a program that is in desperate need of funding, and cutting a funding source could accelerate the rate at which it runs insolvent. The Tax Policy Center estimates that eliminating these taxes would reduce revenues by $1.5 trillion over the next decade. While $1.5 trillion is significant, this tax alone certainly doesn't solve the shortfall we're facing. And the elimination of this tax, best estimate from the Tax Policy Center, is that it would accelerate the insolvency of the program by 1 year. The fact that nearly half of all Social Security recipients are paying taxes on their Social Security benefits is something worth taking note of, because that was not the original intent of a progressive taxation system. Rather, it is a consequence of these income thresholds not being indexed for inflation. Once you reach retirement, earnings that are generally subject to ordinary income tax would be withdrawals from traditional retirement accounts, traditional earnings if you're still working, rental income, and yes, Social Security income. For instance, if we have a married couple who has a traditional 401k, and let's say they are of RMD age and required to take out a $50,000 distribution from this 401k this year, let's also say that each individual receives $1,500 a month from Social Security for a total of $36,000 in income on an annual basis. All of a sudden, this household has an annual income of $86,000 a year, and 85% of their Social Security benefits would be subject to ordinary income tax. This could result in a hefty tax bill that this household didn't otherwise plan for. On the other hand, let's instead say we had a couple who funded a Roth 401k. In this case, there would not be any required RMD, and even if this couple did decide to take out $50,000 from this account to fund their retirement activities, there would be no income tax due on this distribution. So if their household income is $36,000 from Social Security, following the standard deduction, their income would not be subject to any tax at the federal level. This example also illustrates the importance of having different accounts to draw on when it comes to your retirement, so you have greater flexibility. The debate over taxing Social Security benefits isn't just about dollars and cents. It's about fairness, sustainability, and ensuring retirees can live with dignity. Some argue that taxing Social Security benefits creates an unfair burden for today's seniors. Others argue that it's a necessary piece to the puzzle to keep the Social Security program afloat. But what's clear is that this tax now affects more people than it was ever originally intended to, because these numbers and these thresholds were introduced decades ago and never indexed for inflation. The recent presidential campaign and the proposal to eliminate taxes on Social Security benefits have put these issues in the spotlight. Are we easing the burden of seniors, or are we accelerating the insolvency of the program? These aren't easy questions and they don't have simple answers, but they are certainly things that need to be addressed. What do you think about this situation? Do you think Social Security benefits should be received tax-free in your retirement years? This is a debate that affects all of us, whether we're in retirement, nearing retirement, or years away from retirement. I'm really curious as to what your thoughts are, so share them in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye. Hey guys, what's up? I'm Erin. Fair board and blah. Whew, that's a lot. Government speak, I love it. Okay, no I don't, no one loves it. Okay, I'm not gonna say that, but it is. Tribute, social, blah. I've brought these subject, their benefits. Whew, that's a terrible sentence. Let's rework it. Now I should read it this way. You pay, oh, this is a paragraph I don't want to say. Things that would be subject, one would accelerate. Whew, is that, sometimes I am like freaking broken, geez, oh geez.